Welcome back, everyone, to Under 450K, where we go through suburbs, investment suburbs for under $450,000, where you can invest your money so that you can reap the rewards of capital growth and investment income. And the reason why we do under 450K is because we want people to be able to invest with about $60,000 to $70,000 into regional hubs in and around Australia for a little bit of money compared to purchasing property in Sydney, where no one can really afford it anymore. Let's be honest. And one of the suburbs that has piqued my interest, and one of the suburbs that I've been looking at for quite a while now, is South Grafton. Now, it has already experienced a bit of capital growth as well, but due to the 2022 floods, that sort of capital growth has stagnated. But I think it is picking up again. All the data metrics point in the right direction for it to suggest that it's picking up again. South Grafton is just north of Coffs Harbour, a little bit west north of Coffs Harbour, and it's just sitting aside Clarence River, which is quite a large river, and it's had problems in the past as well. And South Grafton is a well-established, diversified town that has a lot of potential for capital growth in the near term, in the short-term future, and in the long term as well. And so, like always, I just want to go straight to the metrics because without looking at the data, it's pretty much pointless. So once again, I just use Boom Score to show you, but generally I use DSR data, but it is once again paid source, so I can't show it on YouTube for free, otherwise my account will get blocked. So Boom Score is one of those data you can, one of those free data sources that you can go online. Not always 100% accurate, so always verify with multiple sources of data. Right. So the things I like to see is days on market. Now, days on market is 58 days, sort of trending up, but it's actually trending down on DSR data. And we want to see that continue to go down as it sort of trends forward. Stock on market extremely low, 1.12%. That's extremely low. Means it's just not enough properties on the market, right? People are fighting over the very scraps that it is at this very moment. Gross yield about 6%, which is good. We want to be achieving 6 to 7% in gross yield at least, because right now with the interest rates, if you're not getting 6 to 7%, you're putting just too much cash out of your own pocket. If the interest rates go down, it will help you manage your cash flow, but gross rental yields, you want about 6%, which is good to see. Vendor discounting minus 6%, but I've heard it's lower on DSR. So you definitely want to go double check that out. Really, when you get vendor discounting sort of trending upwards to 0%, that's when you know the market is really heating up. When vendors don't give discounts, that's when you know the market is seriously becoming hot, because they know they can get a higher price for their property than what it's actually valued at, right? Vacancy rate 0.24%. Absolutely no rental properties on the market, right? And you want to verify this, all you have to do is literally go rent in South Grafton. Oh wait, I've got literally 4 properties available to rent, and it's about 450, 410. I mean, you got one here for 650, but that's a 4-bedroom house, right? So you can already verify the fact that there's just literally barely any properties in South Grafton to rent. In Grafton itself, there's a little bit more, right? There's a little bit more. But we're looking at South Grafton, right? Even within regional hubs, we're looking at certain suburbs specifically to purchase property in. And in South Grafton, you can literally see there's only 4 properties at this very stage to invest in. So vacancy rates are incredibly low, which is a good thing. Online search interest, this data isn't very accurate. Like you can sort of see just peaks and troughs. But online search interest is good. We want it to be a little bit higher generally. So definitely double check that as well. Proportion of renters 30%, that's average. You don't want anything more than that, or around 35 40% is 40% is the absolute max. We never want to go above 40% renters, just because then there's a lot of competition out there, right? We want to buy in suburbs where the owner occupier ratio is higher, because that means it's a more livable suburb, and livable suburbs are the ones that increase in capital growth, not the one where investors are piling on in. So that's a little golden nugget for you guys there. So that's the data side of things. You can see it's very positive, and we can go sort of verify this in SQM research, which again, once again, a free resource completely. So go check that out. Postcode 2460. We can see, the data over here, where property prices just during COVID, like every other suburb, skyrocketed, and then in the 2022 floods, we can see the house prices dipped. Right, and that's pretty much, I believe, due to the floods. The floods dipped, but you can see that demand quickly rose up again when people sort of forgot about those floods, and now it's sort of stagnating and also going up at the same time. That's what we like to see. We want to see sort of good positive price trend for the last 6 months, along with the strong days on market, the average vendor discounting, etc. And so over a 7-year period, you can see it averages about 6.6%. That's all right. It's not an amazing performing suburb, right? But we want to have short-term capital growth plus long-term capital growth. Over a 30-year period, most houses in most suburbs will average about 7% in annual growth every single year. But that's the average, right? Some years it stagnates, some years it grows up a lot. But over a 30-year period, it will most likely go up 7% every year on average. Now, the other important thing we want to see rents keep on increasing. We want to see positive rent price increases, which we can see. It's gone from about 350 in 2020 to about 400, 450. And we can see right now that the prices for rents around 450 for the average three-bedroom property in South Grafton. So if you get a higher quality investment property for a bit more, you can get about 500. But I think when you purchase in South Grafton, you're expecting between 450 and $500 as your rental income. And again, very good positive price change. I know it's a 12-month change, 1.2%, but that's okay, right? 3-year period, it's gone up 8.6 on average. So very good trends to see. Yes. Another little source I like to verify on is hashtag. Again, free resource, but they have a lot of paid data as well. I don't subscribe to it. It's up to you what you want to do. The stock on market, 0.38%. I mean, they only have inventory for 1.75 months, which is barely anything. Days on market, extremely low. This whole period doesn't mean much. When you buy property in Australia, you pretty much want to hold it for the most of your life, unless you know it's about to bust. Mainly because in property, when you sell property, there's a lot of tax implications. So you don't want to usually sell. When you buy, you just buy and hold. Vacancy rate extremely low, as we already verified. Building approvals extremely low, which is really good to see. So what we like to see and verify is owns outright around 35%, renting is about 35%, and purchase about like 65, 70% of the population is owner occupiers, which is good to see, right? We don't want to see any more than 35% because it's really peaking at that point. We don't want too many investors in the suburb that we're putting money in, right? Because then it's just an investor-led suburb. We don't want that. Rental yield, like we said, it's about 6%, 5.96. So you can really see it's about 6% for rental yields in South Grafton. A median rent, like I said, increasing, stagnating a little bit. I think we can expect an increase in the next couple of months, in the next year or two, for sure. All right. So now, before I go any further, if you are enjoying this video, please smash the subscribe button and the like button and comment down below what your thoughts are about the suburb. Now, I also do have a newsletter under 450k where we go through investment suburbs, where I give these suburbs for free so that you are aware where people are investing money and where I would personally invest my money in as well. So definitely go check this out. Now, it is a gated community, but this content is free, right? It is free. All you have to do is put in your email and verify it, and you'll get access to this. And you can go and check and read through all my past articles about where you should invest and what you should think about it. This is completely for free, guys. So please go and subscribe. This is more important than actually my YouTube channel. So I'd go subscribe to this. Now, I want to go on to the red flag of South Grafton, right? The red flags of South Grafton, because it's important to talk about them. The obvious red flag is this big thing over here. And it's a completely valid concern, right? Because in 2022, we had the South Grafton floods, right? So when was the last time it flooded? This is not accurate. 2022 is when the South Grafton floods happen, right? It is a flood zone. There is a risk that flooding could happen in Grafton. This is why we need things like insurance. We need to have the important things like insurance, right? Because Grafton isn't a flood zone. It is a major river that runs through the entire suburb. But that's okay. We can still invest in these suburbs. And the reason why I say that is because there are things like insurance that exist. Right? When there is a suburb, that's why you want to have good insurance. And I just did a quick quote online just to get a rough estimate on how much insurance costs. It's about 2.4k land and residential building insurance, right? And so you may be thinking, is that a lot of money? Well, I did a comparison for you. Now, a lot of investors are going around and investing in Townsville, right? They're going in and buying around Townsville at this very moment, right? There's rivers here and there all throughout this area. Now, this is a very popular investor suburb at the moment where people are pretty much overpaying for their investment property. And when I did a similar quote in Townsville, you can find that the insurance premium is around 3k, right? So between South Grafton, which had the floods in 2022, and Townsville, it's pretty much more expensive to purchase in Townsville because of the insurance premiums. So I don't think you should be overly concerned about the floods, right? Have good insurance, which I think Terry Shearer is a great insurer. Have good insurance, hedge your bets, and know that you are buying in a flood zone, but it is what it is, right? If you're going to go invest in Townsville, you have the same sort of issue, right? A lot of these regional towns are near rivers as well, so it's almost expected that you end up in some sort of flood zone. But the thing is, right, the other little tip and golden nugget I can give you, right? When you purchase investment properties, you don't go and purchase right here. You don't go purchase in these pockets, right? You want to go further away. You want to go further away into like these beautiful pockets, these beautiful residential pockets, with these line of properties where people actually want to live away from the river, but still close enough that they can attend their shopping centers, their schools, etc. You want to be investing to these places, and this is where insurance premiums will also be lower because there's less chance of flooding here in short-term rain events. So take that into consideration. Now, that's one big red flag. The other big red flag, or not really say big red flag, of South Grafton is the amount of developable supply available. Right? You've got lots and lots and lots of land, just like you'd expect of any regional town. But what we do have in South Grafton is virtually zero building approvals. Now, there are other ways to check this as well, but there's virtually zero building approvals. So in the short term, you have nothing to worry about in terms of mass amount of supply coming into the suburb. Now, at least not for the next 18 months or 2 years, right? It takes a while for building approvals to come through, let alone for properties to be built up. It takes time. So the next 2 years, it'll be completely fine. Now, if in 10 years' time a large amount of supply comes into South Grafton, there's two things that happen. One, population increases. Number two, rent prices dampen and also house prices dampen. That's a normal effect. But if you hold it for a long period of time, that demand will also catch up and house prices will eventually increase again. But in the short term, you'll make capital growth. In the long term, it can dampen and sort of stagnate as much, well, like what you see here. Right? It goes through periods of stagnation, which is completely fine, and then it goes through a boom cycle. Every suburb has its own cycle when to purchase property. Awesome. And the last important thing that I want to go through, I know videos always end up being longer than what I want it to be, is the actual, and this is what I mean by breaking down suburbs for you guys for free, right? I'm actually giving you the information out there so you can go and purchase properties in these areas if you choose and you do your own checks and make sure everything is working fine. Right. The last thing I like to see is a diversified economy, and I had it here. Okay, yeah, beautiful. Occupation by industry, right? You got hospitals. So you look, sorry. You look at the occupations. Yeah, the last important thing I like to see is occupation. You can see that it's community, professional services, laborers, technicians, trades, sales workers, and what we can also do is check by industry sector of employment. We can see healthcare is a big industry. Retail trade, education, training, construction, a bit of manufacturing, professional work a little bit, which is okay for regional towns. That's fine. But what we can see here is it is a very diversified economy. So let's say manufacturing collapsed. There are still the top 5 industries. Let's say healthcare collapsed, which is very unlikely, by the way. Let's say healthcare collapsed and there's no healthcare industries anymore. We've still got public administration, retail trade, education, construction, manufacturing, etc. It's diversified. So the suburb is not reliant on one occupation, unlike suburbs like Kalgoorlie or mining towns where it's pretty much a mining town. Now, if you did enjoy this video, please smash the like button and subscribe down below for more content and more suburbs. Till next time, peace out.